The US dollar not looking good right now for the greenback, right? We are still within this narrowing range, cap to the upside at 100, cap to the downside 99.50. Now, I'm going to make one very big statement. In my opinion, you know how we said there's that potential that the dollar could hold this region and break out to the upside on the whole inflation trade, but there isn't going to be, bear in mind, I don't think there's going to be that inflation trade supporting the dollar anymore. And the reason I say that is because remember, I've said when we've gone over all these economic data points, the high impact data points, remember, I've got over this all last week. We had serious slowdowns in economic data. We're seeing serious slowdowns in economic data, these retail sales numbers contracting and consumer sentiment coming down. There is, when you look at a couple of weeks ago, obviously we had the non-farm payrolls on Friday, where we've got lower wages there. We have the actual non-farm employment change jobs being removed, 23,000. This is definitely worrying times and fears of stagflation, especially where if you look in the United States, right, where we observed US yields, the bond market, we've got a bit of a crisis at the moment because yields have been drastically rising. Obviously, you saw that big spike there to the upside yesterday. We carried on 4.75%. The 30-year yield is at 19-year high. So, usually you'd be thinking yield, high yields, investors going to flow into there to get some of that yield. But it's not the case because there's fears of stagflation, there's fears of economic slowdown in the United States, which is why the dollar was unmoved on those yields rising. So the inflation trade, bear in mind, look at where oil prices are at. Oil prices have been very much elevated. Look, pushing, pushing, pushing back to the upside. So inflation fears are there, but not supportive for the dollar anymore. Okay, because of economic slowdown in the United States. Hope that makes sense. So this scenario here is looking increasingly likely. This downside pressure, 98, 97, so on and so forth. This downside pressure should be the next major area of liquidity to target, but looking very likely at this moment in time. In terms of today, keep an eye on later on the FOMC meeting minutes, but it's going to be, I think, more or less a non-event. We know how they voted. We know the more members should just it'll just give us a deeper insight into their thinking, but it's probably going to be more so not hawkish given nine members wanted rates unchanged. So yeah, I'd lean towards sort of further downside pressure for the greenback. Not looking good for the dollar. Guys, all this knowledge I've put into various forms of resource, which you can check out via the link below. I'm keeping. No, I'm not. Check out our links below. You can sign up for whatever you want down below. If you have any questions, hit me up on DM on IG, hit me up on DM on X. Stay lit, stay blessed. Let's get it.